Here's something that nobody in Milton is talking about out loud, but thousands of families are thinking about it at night. What happens if I genuinely can't afford my mortgage anymore? Mortgage renewals are hitting different in 2026. Families who locked in at 1.5 or 1.8% 5 years ago are renewing at rates that have doubled and even tripled that. The Bank of Canada's own analysis found that 5-year fixed rate holders renewing this year face an average payment increase of about 20%. On a large mortgage, that's several hundreds of dollars each and every month. We've helped over 3,000 families buy and sell across every market this town has seen. And the ones who come out ahead are not the ones who wait and hope. They're the ones that get informed and act early. I'm Amy Flowers, and the Flowers team has been serving Milton homeowners since 2001, more than 2 decades in this market. We've ranked #1 in Milton since 2009, and we're a top 1% Royal LePage team across Canada 16 years running. Okay, we're not here to alarm you. We're here to give you the honest picture, because that's what actually helps people make good decisions. It's not a crisis, it's a warning. And the group at most risk is very specific. Pandemic-era buyers with high debt loads facing renewals for the first time. If that's you, now is the time to act. So what do you actually do if you can't afford your mortgage? First, call your lender before you miss a payment. This is the most important move and the one that people put off for too long. If you reach out before you're in arrears, you have options. Payment deferrals, amortization extensions, converting variable to fixed to stop the bleeding. Your lender does not want you to foreclose. That's slow, expensive, and bad for everyone. So call before you're late. Second, look at refinancing. If you have equity, restructuring your mortgage at lower monthly payments can buy you the time you need to stabilize. Third, rental income. If you have a basement suite or a spare room, a Milton unit is renting from $1,600 to $2,000 a month. That's real money against your mortgage. And fourth, look at the full picture. Sometimes it's not just the mortgage. It's the mortgage, the car loan, the HELOC, and the household income that's changed. A financial planner or a credit counselor can map the whole thing before you make any major decisions. Now, when is selling the right call? Selling is not giving up. For a lot of Milton homeowners right now, selling strategically is the move that protects the most equity and keeps damage to a minimum. Here's the key distinction. There is a massive difference between selling on your terms and selling under pressure. A strategic sale, priced properly, staged with a strong negotiation, that maximizes what you walk away with. A power of sale where the bank controls the timeline and the price almost always means selling below market and credit damage that follows you for years. Milton's single-family homes average $1.1 million in December of 2025. If you bought between 2017 and 2020 at prices between $650 and $850, you still have equity worth protecting. But that window doesn't stay open forever. The homeowners who come to us early, before they've missed a payment, before the power of sale, they walk away with cash in their hands, clean credit, and options. The ones who wait until the bank forces the issue rarely do. So here's what we want to do right now. Get an accurate picture of where you actually stand. We offer free home evaluations, no pressure, no obligation, just real data on what your home is worth in today's Milton market, so you can make good decisions. Visit theflowersteam.ca to book yours. This is not a situation that you should navigate alone. We've been doing this in Milton for almost 25 years. We know this market and we know how to help.